Here we are. Hey, good morning, everybody. It's Brian. Hope you're doing well today. It's the 23rd of September. Yeah, 23rd of September. Here just to go through the numbers real quickly of what I'm watching, what I'm looking at, key levels I'm looking at, and just reiterating a really easy trading process that you can follow. Normally, forex, crypto, and futures. Lately, it's just been forex and futures. I will get back to crypto, I promise. I'm working on some stuff that when I'm not kind of in my daily trading zone, I'm over looking at code, which I'm not a coder. I'm not. So it's taken me a lot longer than I probably should. But I'm working on some code to create a high frequency Bitcoin process. So anyway, as soon as that's ready, I'll show you guys and talk to you guys about it. But anyway, for right now, let's just run through the numbers. As always, we want to kick things off with looking at, let me just get over to the right screen over here, looking at what's coming up for the day. We want to know, obviously, what news is happening so that we can avoid any potential pitfalls there by trading directly into news or taking a trade right on news because we see a bar or a candle or just some level of momentum in the market that's totally news driven, right? So we want to be aware of that so we can make good trading decisions. We want to trade during times that have high volume and high volatility, but that's just kind of the normal trade volume, and trade volatility is high at that time. We don't want to trade during high volatility that's artificial, which would be driven by an announcement or by news, where that volatility is driven by unknowns, and the volatility gets there because market makers are taking, large order, books of orders off the books. They're taking these large amounts of orders off the books because they're changing where they're willing to do business based on the uncertainty of this market that's leading into or during that news announcement or that speech. So that's not the kind of volatility we want. We want volatility that's just that good average high volume and volatility in the marketplace to participate in. Anyway, I think you guys all get that. I talk about that constantly. Pretty much everything you hear I talk about I talk about constantly because I'm very simple, and everything I talk about is a simple strategy, and it's just consistent. And at the end of the day, consistency is what gets you places in this business. Having a plan, sticking to the plan, doing things the same way every time in every way. Someone asked me yesterday, I was having a call with a friend, and he was asking about the forex strategy and why don't I do this or why don't I do that, and I could add this. And I'm like, look, I've done it this way for 8 years, almost, I guess 8 plus years. It works, why change it? Everyone's always chasing this extra little bit. Oh, but if I do this, I might get an extra, percent of my win rate, or I might do this, or I might do that. Man, I don't know. I've just got to a point where I like to look at new stuff. I do. I look at new stuff. But when it comes down to, trading, I'm very slow to make a change. And that's important. Consistency is very important. If you, if you constantly are jumping from one thing to another, none of them are ever going to work because you're not giving any of them time to work. Anyway, I don't want to go down that rabbit hole. Consistency, huge thing. Consistency. What are we looking at in the? Oh, I never even talked about news. Just pulled it up. So what do we have going on today? We've got the manufacturing PMIs coming out. Probably the bigger news for the day that'll happen here is when Mr. Powell testifies in front of the House committee, the House Select Committee, about the economic impacts of COVID-19. Typically, I don't know. I can't get a good read on Powell, honestly. It seems like I get the feeling that he just wants to be honest and talk about what's actually happening. And when you get him in the Q&A and he doesn't read from the talking points, I think you get a really good feel of what his true beliefs are. But he's definitely way better just speaking to questions and answering things than he is reading that canned statement. Especially, you can almost tell when he doesn't agree with that canned statement. Anyway, it'll be interesting to see what happens there, what comes out of this, and how the market reacts to what he says. That's probably the biggest thing today, and that's occurring at 9 Central Time. What does that mean to us for trading? Well, it means, if you're trading forex, we have a limited amount of time to be able to get in and get out of trades. And then before we get up to this 9 a.m. period. Same in futures. The market will have opened for about 30 minutes under regular trading hours, and then this begins, and then really it kind of comes into a period where, while this is happening, and for the short period right after, where the market could be kind of mixed. I mean, who knows? He could start talking, and the market could just take off one direction or the other. I don't know. No one knows. No one absolutely knows what's going to happen with that. More than likely, though, the market will kind of chop around a bit here and there, and then won't really start moving until after he wraps up or gets into that Q&A where the market gets a really good feel for what's really, potentially coming. And, so I would say Forex side of things, we've got, about 2 hours, hour and a half before we really have to kind of cut it down and be careful with positions that might get kind of volatile around the news coming up. For futures, I think it's probably best to sit on your hands until after that is done, and then see what the direction of the market is. But we can still look at key levels and talk about what's going to be happening for the day. All right, so Forex, talking about Forex, we've got about 2 hours here, so there's ample amount of time to look for potential opportunity. Where does the potential opportunity lie? Well, the pound, man. The pound's certainly a mover for the day. It's being very heavily bought. So the pound is certainly a strong currency for the day. What to pair it against becomes the big question mark. And we've got a couple out here. You look at the pound versus the USD. The USD has been actually weak coming into the session. So pound versus the USD could be certainly a good pairing. If we look at that over here on this screen, we can see the pound USD typically moves about 130 to 140 pips. It's moved 73 for the day. So, if we get continued movement on the pound pushing to strength against the USD, do we have opportunity for that to move that quick 20 pips or so that we would need in order to get into a profitable position on a breakout, on a market breakout? Yeah, this is what I talk about, and I can make this bigger over here. This is what we talk about all the time, is looking at, we don't just blindly identify potential opportunities over here on the currency strength meter, right? We don't just blindly go, oh, this is strong, this one's weak, I'm going to trade it. This gives us the idea of what to trade, because we're able to see which currencies are moving, which currencies are actually being heavily bought, which ones are being heavily sold, and that allows us to create a currency pair. But then once we know what pair we're going to trade, we still need to see if that's a viable trade. How much has it actually moved? Yesterday we talked about the fact that many of the pound related currencies had pound-related pairs had already exceeded or moved to or exceeded their current ranges. If we're coming into this kind of the end of things, so we have to look at this and keep in mind of how much something can actually move based on its average during this market session, this U.S. market session. So it typically moves about 130 to 140 pips. You move 73. Can we get a quick 20 pips out of that? Yeah, I think we've got a better opportunity than we did yesterday when it had moved 140 on an average of 130, right? It did move a little further, but not much. So do we have opportunity? Yeah, we've certainly got opportunity. Now, the next thing we want to look at is the volume detail. And as this breaks out here at the top, if we get a good push on the pound where it continues strong and the USD continues to push down weaker here, hopefully we'll start to see our volume detail flip over to support that buying of the pound USD, which would give us that opportunity to continue long out of the top of this breakout box. And that'd be the direction that we want to trade based on the pound moving to strength and the USD moving to weakness. So we do need a little bit more to come into play here in order to take that trade, but certainly the pound USD is a viable opportunity for us as with some potential volatility around it and a potential pairing. But we do need to wait. It's not a trade yet. I mean, could you just place a breakout? Yeah, absolutely. You could just place a breakout at the top of that box, but it's not really there. We need to see the USD continue to push down to weakness, and it hasn't yet. The USD is pushed above the midpoint in the minutes leading up to the U.S. session, and now it's still above. So we need some more things to happen before that's a viable trade. Other ones to look at, the pound versus the CAD, same thing. Typically a pretty volatile currency pairing, but right now CAD's fairly flat. It's hanging right at the midpoint. What we need to see is this CAD break down below the midpoint, and over here on our on the currency pairing, we need to see the volume detail flip over to support the buying of that in order to support the direction that we're looking to go. But certainly opportunity there. As far as anything else, I think those would really be it. You could certainly look at pound versus the yen, is another one. Although, as I've said before, when we're looking at anything, we want to trade instruments during the times that they're the most active. Now, obviously, every currency trades at all hours of the day during the trading week, right? But all things aren't created equal. Just because it's traded doesn't mean it's as active. Like right now, for example, Tokyo markets are closed. People are asleep. Is the yen going to be as heavily traded right now as it might be? Well, as it is at the opening of the Tokyo session, as it is during the London session when you've got when you've got Tokyo and London and all the European markets overlapping. When's it more active? So I would err to the side of looking at the currency pairings that have the opportunities based on what's actively traded. So your yen, your Aussie, your New Zealand, while they're moving, they're going to be more volatile moves because there's less volume being traded, so they're more likely to kind of whip. They're more likely to whip one way or the other. Because there's just larger orders coming in, absorb whatever pending orders in that order book, and it just takes it one direction or the other. So anyway, look at your pairings based on not only the activity that we're seeing on I'm pointing, you can't see that, not only on the activity that we're seeing here on the currency strength meter of which ones are being bought, heavily bought and heavily sold, but also take into consideration what's actually being traded right now, as far as what's actually being traded during active market sessions. I think that's really important. All right, moving on. Heading over here to futures land. Over here in futures land, just a quick look at S&P, crude, and gold. On the S&P, we've got a bit of a mixed bias today. Not even a bit. We have a mixed bias today. The 4-hour bias is short, but the 30-minute bias is long. So we have a long bias on the 30-minute, short bias on the 4-hour. What does that tell us? What do we do when our bias is mixed? We sit on our hands. We don't do anything. We don't have to take a trade. It's telling us, hey, conditions aren't right. One's, feels like we need to keep moving down, but the other one's starting to move up. And we've got this mixed message in the marketplace, and we're just going to not do anything. There's no need to do anything. If you absolutely have to trade, you just can't possibly go a day without taking a trade. You just got to be in there. Then look at your key levels over on the 4-hour market, on the 4-hour time frame, and just say, hey, we've got a key level up here at 3320. We've got a key level down here at 3300. So you got about a 20 point range here, and we're in the middle of it right now. Well, if we pull back, and let's say if you're going to intraday trade, maybe you just use the 30-minute bias as what am I trying to? I just lost my train of thought. It just floated right out of my head. Maybe you use your 30-minute bias as the leader of what you want to trade. So if you say that, okay, we're in a long bias here on the 30-minute, and on the 4-hour, if I come down to 3,300, so if we reach 3,300, I'm going to look for a bounce. I'm going to look to buy it off of that. So I'll look to buy off of 3,300. But if it breaks it, and it breaks down and it crosses below, and we start having where the 30-minute bias flips over on us to a short bias, then maybe sort of like if it breaks below 3,300, you might look to sell off of 3,300 in the direction of that new bias. But for right now, if you just absolutely have to do something and you can't possibly sit on your hands and confirm the market based on what's happening in the 4-hour and what's happening on the 30-minute and see if they're in correlation, and if they're not, which they're not today, don't trade. If you absolutely have to do something, maybe look at a bounce off of 3,300. You might even look at 3,320. You know, if it pulls back up to here and breaks that area, that could be your opportunity to go long. But I would really caution against it. You know, I feel like, you know, consistency comes when you follow a specific plan, and the plan for me says, hey, we've got a mixed bias, let's sit on our hands, right? Crude is back to a short bias again. The 4-hour bias is short, the 30-minute bias is short. This tells us we'd be looking for short trading opportunities. We can look for that pullbacks to 40, look to settle off of 40, or if we want to, you know, do breakouts, we can look at a breaks down here below 39.40. If it breaks below 39.40, we can look to continue shorting from there. The other method, obviously, the one we speak of very often here, is oh man, I didn't change this front month. What month do I want to be on? Front month on that should be November, which would be the X, right? I always get the month codes mixed up. Can't we just use N? Anyway, front month would be X. There we go. Blah, blah, blah. What was I saying? Crude. Yeah, bias is short. Short bias here on the 4-hour, short bias on the 30-minute. So, you know, be looking for short trading opportunities. We talked about some key levels to look at for bounces and breakouts. The other way to do it would be to watch for the market to make higher lows and higher highs, and then sell off the bottom of that previously closed higher low as it breaks back through in the direction of the directional bias here. If it just keeps moving up, then you don't trade it. You never got ticked in, you don't trade it. Easy peasy. Gold, we're in a short bias still, so gold is telling us 4 hours short, 30-minute is short, so we'd be continuing to look for short trading opportunities here. That could look like a pullback to 1970, well, really, yeah, 1900 here. Pullbacks to 1900 or breaks down below 1880 would be our spots there. The other way to trade it would be to watch for this to make higher lows and higher highs, and then trade, you know, a short entry off the bottom of that previously closed higher low. So that's what we're looking at there. So that is it. I think we hit them all, and that's what we needed to cover. I am working to get pushed back over to this for these sessions to just talk about everything here in the relation of one chart, where we have our 4-hour bias and 30-minute bias all in one place. But for now, we're not quite there yet, so we'll keep talking about the TradeStation charts. So that's it. That's all I got for you for the day. I'll leave it with you. Have a great day, and we'll talk to you soon.